Hey, good morning, everybody. Welcome to Mining Stock Daily. In this week's long form episode, we welcome our good friend, the Green Chicken, Doomberg, back to Mining Stock Daily for a long conversation, really focused on rare earths, the latest deal between the DoD and MP Materials, and really what this means for the greater scheme of things when it comes to rare earth production and supply chains in the United States. Is there more to come? Doomberg thinks so. So we cracked that egg a little bit, actually not a little bit, quite a bit in the conversation. Then we have a lot of conversation more about gold and then also the fervor in equities in the United States. Great conversation with Doomberg. Special thank you to Revival Gold, Integra Resources, Vizsla Silver, and Equinox Gold for their continued support of the podcast. And as always, hit that like, subscribe, and share. You'll find us on your podcast network of choice, on YouTube, and also on Clear Commodity Network at clearcommodity.net. All right, let's jump into it. My conversation with Doomberg. We are going to end this real incredible week in markets, specifically in metals and mining, with our good friend straight from the chicken coop, the green chicken himself, Mr. Doomberg. Doomberg, welcome back.
Trevor, it's been too long, brother.
I know. I was trying to think the last time you and I chatted was back shortly after we launched the Clear Commodity Network. I think you were one of our first guests.
That's right.
Um, yeah, so that's been a lot of fun. But obviously, you've been publishing a ton of content, and again, as always, for the last couple of years, no shortage of things to write about.
Absolutely. Yeah, we've been a pretty good run too of making some off the wall calls, and so that's always nice when it works out too.
Yeah, no, absolutely. So, diving in, and I was actually talking to some mutual friends of ours a couple of weeks ago, and I said, when I was thinking, I gotta get Doomberg back on. And I know you continue to live as the green chicken and in anonymity, but it made me think, like, you and I have, mutual friends we cross paths with. But like, I was just a curiosity, just out of my own curiosity. Have you and I actually ever met in person that I don't know of?
No, not
Okay.
yet. Yes,
Okay.
the
Okay.
friends that you and I share are mostly virtual,
Okay.
through a couple of common connections that I know who you're referring to. But yeah, no, you and I have not yet met in person, although it is on my bucket list.
Okay. Well, mine too, and I look forward to the day when I'm surprised that again I get to meet the chicken in person. Um, Doomer, so there's a couple things that we want to tackle over the next hour or so. Originally reached out because I wanted to talk with you regarding the rare earth deal regarding MP Materials and now the DoD being significant equity shareholder of that company. And there's obviously a lot of layers into that deal, but that's originally the premise of why I reached out and wanted to chat with you, talk about that. And then obviously with these markets, with physical markets, commodities just continue to move higher and higher. Every day is just like something new, it seems like. We're going to talk about that and then also some nuclear energy at the end of this. So maybe let's jump in and really tackle the business at hand. You did write a
Sure.
piece. You did write a piece called "How It's Done," and you subtitled that "The U.S. Finally Gets Serious About Rare Earth Metals." Let's break this in. I mean, obviously, we're kind of been waiting for something to happen. We knew when it comes to rare earths that supply chain directly coming from China, that was continued to be a security factor, a national security factor for the United States, and that's been weaponized over and over again, and it has of recently. So let me ask you, was this a good move for the U.S. government and shareholders of MP Materials on the back end, like the big 30,000 foot view of it, of the government now being majority shareholder of this company?
Well, it's not a majority shareholder. It's just the biggest shareholder if all of its warrants are eventually exercised. And given the reaction of the stock since the announcement, that looks pretty likely. The government has already more than doubled its money on the deal. Obviously, by the name of the title of our piece, quote, "How It's Done," we were very supportive of the deal. But to frame this properly, I need to go back to a piece that we wrote all the way back in October of 2023 called Geopolitical Warfare, where, based on our own industry experience in the commodity sector, we observed over the decades how China leveraged its willingness to degrade its local environment to gain monopoly share in a number of critical metals and minerals. What China typically does when it has a strategic vulnerability is it finds the earliest stage in the supply chain that it can dominate through brute financial force. And one of the tools that it uses is to allow its domestic champions to circumvent environmental laws that Western producers would never get away with, which thereby allows them to have the lowest cost possible and put everybody else out of business. And this is exactly what they did in the rare earth metals. And the step that they chose to monopolize is the processing of concentrate into pure metal. That's very dirty business, produces an awful lot of waste, and treating that waste to Western standards is expensive. And we pointed out that if your objective is geopolitics, then pollution is a weapon. And one of the phrases that we've tried to coin is that it's very difficult to compete on cost when your competitor's idea of a water treatment plant is a pipeline to the river. And sure enough, about a week or so before this deal was announced, I believe, the New York Times wrote a big expose, which was essentially geopolitical warfare 2 years later. Nice for them to catch up to us. And then this MP deal happened. So what did we say in geopolitical warfare 2 years ago? The free market does a terrible job of pricing environmental and geopolitical risk, and especially when they converge. And so a new model had to be done. And we applaud the creativity of the Trump administration in this deal. Happy to talk about the specifics of it and what we think it means. But the more important than just MP Materials is that this deal is an important precedent for what we think are going to be tens of billions of dollars worth of such deals over the next 4 years. And the market action that you are seeing, I think, is beginning to price in that reality.
Yeah, maybe let's get into a few of these specifics, and I think we've done a pretty good job of breaking down. That's kind of, I think there's about 4 or 5 layers into this deal. But one of them, I think, there's 2 of them I really want to tackle. And I want to talk about the federal ownership of equity into this company, and if you expect more of that to happen. And it definitely feels kind of uh, technocratic in a way, similar to the way Germany kind of holds a lot of interest in some of their companies within the country. But also feels kind of vaguely very similar to the way the Chinese Communist parties owns predominant ownership of some of their companies as well. Is this kind of the path you think we're heading?
Yeah, so the deal is not a grant, first of all. I think that's very important to say.
Yeah.
And it is not control. So it is not, government, a nationalization, let's say, of MP Materials. Instead, the government injected $400 million and got preferred stock in exchange and warrants for upside. That's one really important part. And if they exercise all of their warrants, they will own about 15% of the company. By the way, they would be replacing a Chinese company as the largest shareholder in MP Materials. And on top of that, they've put in a 10-year offtake agreement with MP Materials for DoD purposes and directed suppliers to the DoD that puts a floor price well above the current market price for whatever MP Materials can make. That effectively is allowing MP Materials to earn its cost of capital while still treating waste to Western standards and not having to compete against the Chinese for it. And the U.S. in return gets significant economic upside in MP Materials and direct access security supply for the most urgent military needs that MP Materials can provide. One of the expressions in the venture world, which I think you and I both dabble in, is that all the deals are undersubscribed except for the ones that are oversubscribed. and the DoD effectively converted MP Materials into an oversubscribed deal, and lo and behold, like the next day, Apple kicks in another 500 million, right? And money has a way of begetting its own momentum. If everybody's in on the deal, everybody's in on the deal. Now, this is in no way a recommendation to buy MP Materials, especially at this price. Do your own due diligence. That the news is out. The market has priced it in. It basically doubled the stock. The time to have bought it was when everybody hated it. And by the way, interesting side note, the amount of hate we get when we write favorably about MP Materials is unique. There's an awful lot of disgruntled short sellers in this name, and they are quite angry about this deal. They make all manner of claims about the metals distribution at the at MP's major mine, and they don't have the right stuff, and this is all a fraud, and the government got swindled, and that's fine. If you think the DoD and Apple are incapable of due diligence, go ahead and short the thing. And we weren't really commenting on MP Materials. I think the structure of the deal, this is a deal that a business person would strike, and Trump's administration, for whatever you think of the man, his administration is filled with people that have significant business experience. And this is a deal that closes, in theory at least, closes a significant geopolitical weakness while protecting shareholder interest and rewarding capitalists you know, um, who put their own money on the line long before this deal. And now what we're seeing is, of course, in the one big beautiful bill, there's a section in it that sort of allows the Department of Defense to make such investments. It's not really spending per se, right?
Mm.
Because you're buying an asset in return for money. You might be committing the government to future spending via these take or pay agreements, but they could do up to, I think, like 100 billion of these, as authorized by this new bill. And I think we're going to see more and more of them. And so if you think of the Department of Defense as a strategic investor slash customer, people that have a desperate need for certain materials often invest and co-invest with development partners to get projects off the ground, right?
Mm-hmm.
Imagine a major utility co-investing in a LNG import facility, for example, in Europe. Like this kind of stuff happens, and the Japanese do it. They need LNG, and so they're all over the LNG supply chain. So this is no different, except it's $1 trillion budget, and the U.S. military.
Yeah. What's interesting, and there's a lot of things and fascinating about this deal, but I keep on thinking back to the relationship the U.S. Department of Defense has with stibnite in Idaho. And obviously, that's a gold antimony project. The Biden administration gave it the green light on their way out the door last year. And I think it's kind of been fraught with legal battles ever since, which is one typically happens once a permit is given. But the DoD's involvement with Stibnite was more on the grant side of things, providing them cash to move forward with development and permitting, where this is, a lot more, there's a lot more involvement from the DoD. But I guess, would you expect maybe something like maybe the DoD coming in as a potential equity owner of a project like Stibnite with Perpetua Resources? Or would you expect the likely of like a replication what we saw with MP Materials happening with other companies in the U.S. on the rare earths, or even say copper or other important materials like nickel or whatever the things we would see up in your neck of the woods, up in the upper Midwest?
Yeah, I think for starters, investors would be wise to do a deep dive on all of the metals and minerals that China has a chokehold on, see where their chokehold exists in the supply chain, and then try to imagine what the DoD would do. And I think we're going to see dozens of these over the next 3.5 years. And if J.D. Vance or whoever succeeds Trump on the Republican side happens to win in 2028, that momentum will continue. Look, J.D. Vance comes from venture capital. He's out of Peter Thiel's world, right?
Mm.
They know how to structure deals. They know how to deploy risk capital. They understand supply chains. Like again, China in geopolitical warfare 2 years ago, and we actually were focused on graphite, for example. China's one of the largest producers of graphite in the world, and you've seen the pictures. Graphite is a dirty business. They dominate polysilicon processing, so they don't dominate the production of polysilicon, but they have 98% share of ignit formation, which then gets sliced into wafers. They have 98% share of that. So even if you mine polysilicon in the U.S., and there are 3 polysilicon producers in the U.S., you still have to ship it to China,
Mm.
right? They go as far back as they can, and they create chokeholds. And just classic example of Chinese behavior, which we pointed out we did a doom zoom on China's energy strategy last year called the Year of the Dragon, China through the lens of energy for our pro tier. Um, and China is deeply short oil, for example. So what does China do? It becomes the world's largest refiner, at least as measured by nameplate capacity. So suddenly, if China's oil is, cut off, a lot of people are going to feel the pain because where's the diesel and the jet fuel and the gasoline going to come from for the world? And so China's neighbors have a vested interest in China getting its oil. And that's as far back as they can go while they're simultaneously working to develop their shale and drilling really deep holes and all kinds of things they're doing. And of course, electrifying and powering those electric vehicles with coal. They're doing everything they can to close that weakness. And so um, the Trump administration, one of the things that shocked us about this whole episode is that after spending so much of its environmental base to gain monopoly control, the administration was surprised that China would dare to use it. Well, why do you think they accumulated it? Of course, they're going to cut off rare earths and shut down our automotive factories. Trump entered this trade war falsely assuming he had escalation dominance. He did not. And he found out quickly that he did not, which is why he backpedaled. That's embarrassing. That motivates the type of response that we're seeing. Okay, we can't have this anymore. It was an OS moment, if you know what I mean. But we knew it. Our readers knew it. You knew it. You say we're all just sort of standing around waiting for something like this to happen. And I guess it took the bluff of tariffs against China for the administration to finally wake up to what has been obvious to those who spent any time competing against Chinese companies. I'll leave you with a story. I was in the solar industry when China was doing this, okay? Mm. And I observed it happen. I felt it personally. And I remember talking to a procurement executive at a very large B2C company that you would know that has all the shiny booths at the COP meetings, and they have their, chief sustainability officer and green this and green that. And the procurement team put out an uncompetitive bid. They said this is what the market is offering us, a Chinese bidder for a certain critical material. And I said to them, they've stolen IP and they have no environmental stewardship. We cannot meet that price. And I thought you were an environmentally conscious company. And they just looked at us deadpan and said, that's for the courts to figure out. If you can't meet this price, you're going to lose the business. You lost the business. So the hypocrisy of industry is such that it can't be trusted to price in national security risk at all. And so the government has to step in this way. Now, we got a lot of pushback from free marketers and, why should we be doing this? Well, okay, that's fine. You can decide that China gets geopolitical control. You just can't then go to war with them, economic or military, because they supply all our weapons and they control, these critical choke points. And so you could do one or the other, but you can't do both.
Yeah.
And so that's where we are.
What's the MP materials deal, and you kind of hit on it beforehand, but it does provide a new price floor of $110 per kilogram of the neodymium, praseodymium. I struggle with praseodymium for the last couple of weeks here, pronouncing that. But so it basically creates a new market floor for that. And so my follow-up question is, okay, these materials, obviously, we're seeing the strategy here. Where does it end, or what's next? Is there another price floor for other rare earth elements, tellurium, or something within that matrix of the periodic table? Do you provide a new price floor for nickel? That's been flooded by the Indonesians, backed by the Chinese. Do you provide a new price floor for tin? Or, where does this stop? Is this something that's going to be kind of a big ball rolling down the hill, just continuing to pick up momentum?
So I wouldn't call it a price floor in the sense that I think you're describing.
Okay.
So what is a price in industry, right? Everyone thinks it's straightforward. I just pull up my Bloomberg and I punch in the ticker and I see a price. In the commodity world, there's price benchmarks, and then there's the price at which specific transactions occur, and sometimes they can be very different. So, for example, you might price your oil based on West Texas Intermediate, or you might price your coal based on the Newcastle contract, but that is just an input into a contract between two entities. So, to the extent that the contract between the DoD and MP Materials impacts the market, you could argue both ways. MP Materials might be willing to dump its extra supply at a much lower price because it's making plenty of money with the
Mm-hmm.
DoD. And so what we're seeing is actually because the market broke down on this geopolitical environmental nexus, the market is kind of broken. And so I don't know what you could read through individual contracts. The second price commitment might be at a different price if they do another rare earth deal because of the nature of the resource. And it might be cheaper to process or it might be more expensive. Like this deal was cut specifically for MP Materials to assure its investors that it will earn its cost of capital, assuming they execute. That's the way I would read this transaction. I wouldn't necessarily read too much across the market. And the market for such metals was already tightly controlled by China. And
Mm-hmm.
so it's a broken market. I think what it really means is investors have the opportunity to sniff out potential next recipients based on their own due diligence and analysis. Analysis that we have not done because that's not what we do. We like to get ahead of the broad trends like this one and put it on people's radar so that when they see it, A, they're not surprised, and B, they remember that we wrote it and called it.
What would hit that checklist for that next door to open? Something similar that has neodymium in it, something that has another rare earth element where the choke point lies with China right now. What would be on that checklist?
I would so during the Biden administration, there were several reports, either from the DoD or the USGS, I forget which, about China's chokehold over critical materials. I'd just go find that.
Hmm.
I'd read that report, and then I would try to find U.S.-based companies that have an undeveloped asset waiting to be permitted, looking for investor support, and so on. Many of these might be private, as you know. The, such That's on a certain part of the risk curve prior to this administration that suddenly looks like it might be hitting the jackpot, right? And now it might be that it's already priced in, so again, not investing advice. But if you were on the search for such things, I would start with getting my hands on a few of the government reports. They exist. They're out there. They're usually
Hmm.
done quite well, pretty thoroughly by experts, on staff. But the USGS usually puts out really fantastic work, as you know, and go from there. And what's critical. And Trump, by the way, tells you what's critical, and his team has been pretty blunt about it. And so I think the watershed moment of the MP Materials deal is that, hey, this is actually real and it's going to happen. And again, all the things you see running, I think, is the market was caught off guard by it, and now there's some catching up to do.
Yeah. Final question on this, and then we'll move on to other topics, Doom. But just in general, was this a good deal for U.S. taxpayers, the ones that fund the DoD?
Yeah, I would say. I mean, the 400 million they put in is now worth 800 million, and who knows what the warrants are worth. I haven't actually read like the contract, but if you look at the market cap of MP Materials and multiply it by 15%, that's kind of what the stake is worth. And let me just pull it up while we're talking. I mean, this is a crude way to a crude way to say it. But yeah, I think it's a great deal. First of all, again, it's a strong signal to investors that risk capital will be welcome and backstopped by the U.S. government, but in a way that is investor friendly. Um,
Hmm.
and I think that's a really important development. And
Okay.
so yeah, I think that again, much better deal than all of the grant money that Biden was shoving out the door for climate change purposes, um, where there's no return to shareholders and basically no guardrails whatsoever, measured in the tens of billions of dollars. So if the MP Materials market cap is 10 billion and change, which it is now, the government has done pretty well on its investment.
Yeah. What's fascinating, obviously, with the DoD, that's one thing. Well, it wasn't too long ago we were talking about a sovereign wealth fund for the United States, and it almost seemed like, a strategy like this with MP Materials, like that'd be like really great allocation for a sovereign wealth fund, instead of the
Yeah,
DoD.
sure. I mean, there's obviously some probably bureaucratic territorial battles, and it does feel like a sovereign wealth investment.
Yeah.
But the DoD knows better than a new sovereign wealth fund what it needs, and there's probably some national security concerns around this stuff too, and so you might do such deals within the framework of the DoD. And in my view, that's a distinction without much of a difference from an investor perspective. But the DoD, especially under things like DARPA, has been making strategic investments for a very long time.
Mhm.
The internet is DARPA, right?
Right,
Um,
right.
let's not kid ourselves. A lot of the inventions that all of these unicorn tech companies were actually brought to market were really DARPA projects that the Department of Defense decided that civilians could use. GPS, another example, right? So yeah, I think the DoD is a fine place for it. It does have a sovereign wealth fund feel to it, as you say. And if Trump does more of this, again, like one thing I've learned in the private world is money begets its own momentum, man. Like if you have access to cap, the easiest thing to do is compound capital when you have ready access to it. Um, and again, if you're in one of those oversubscribed deals, that's when you can make sort of generational money.
Yeah, it certainly feels, there's a huge tailwind when it comes to the metals and mining space, um, in the last 6 months. I mean, we were in Florida a couple of weeks ago for a conference, and it seemed like every other day there was big news that one of the niche parts of the metals complex had another thrust upward. And I don't like it's been a long time since us that play in these markets have felt such enthusiasm, and we've had the rug pulled underneath us so many times. I think that still kind of hazes our judgment a
Sure.
little bit. So where it's like, but it definitely feels like, boy, if you're not, and I'm just saying this I'm just editorialized, but if you're not making money in this metals market right now, I've got nothing for you. It's just
Well,
the writing's on the wall.
as our mutual friend Tony Greer would say, and perhaps this is a great way to close out this section of the discussion. If you're not selling into strength, when will you sell? Yeah, you know, and Icarus prints like this, it's probably time to take a bit of risk off if you've been one of these people that have been in the market and have caught this tail wave. Not, again, not investment advice, but I remember being on a podcast with Justin Hune of the Uranium Insider. It might have even been with you.
Mhm.
Um, and uranium was over 100, and I was kind of cautious and said, you uranium Twitter guys have been in this thing since the 20s, and if you're not going to take anything off at 108, you know, when will you? Right? It's not going to 500. Right? But when you're in it at 108 and you've been in it since 20, you begin to dream that you might get to 500. And I always try to take some off. When I get too excited about something, for example, if I think gold is going to 5,000, I'm going to sell some gold because I'm a good contra internally. Um,
Sure.
and and Tony's advice to go. Another great piece of advice from our friend Sir JJ at Market Vibes is all trades with a stop are a good trade.
Yeah, he had a good note this morning, actually, Wednesday morning as we're recording. And this is actually a really good segue because I do want to talk to you about the macro environment here, specifically with the major indices and stocks. The greed index full throttle right now. Everybody is just completely bulled up. The indices, the S&P, the Nasdaq are pretty much wavering here. It's hard to tell which direction they're going to go, but the sentiment is just so bullish right now. And I literally just put out a tweet, before we started talking. So I'm getting this feed from, an infamous Bitcoiner who exchanged his black hoodie for a suit. So I'll leave it at that.
Yeah.
And who's saying, the U.S. has created the greatest economy of all time ever in history. And then the next thing I see is our friends at North Star Bad Charts saying we have reached extreme bubble territory, and he's got the charts to share it. And so it just shows you like kind of where we are, and like I when that greed index gets all time high and it continues to like top up here, every 6 months, I just get really weary that I'm again ready for a rug pull. Like where when you're watching these stocks and this sentiment, are you weary at all right now here, Doomberg? Because I can get both cases. I can get bullish and I can get bearish in the same argument.
Yeah. So first of all, we don't participate in stocks. We earn in fiat, save in real, like gold, land, and collectibles, and we invest privately where we can affect the outcome. The only security I currently own in any meaningful size is Fizz, Sprott physical gold. Um, and I own a lot of it because it's one of the primary means by which we save. But we do observe the markets, and we're generally pretty skeptical, bearish people, and so we're not good at riding waves of lunacy in a greater fool's trade, which is essentially what's going on now. But I did have to chuckle. I put a note out on Substack's Notes, which is their version of Twitter, which is where we're primarily active.
Hmm.
We've left Twitter a couple of years ago, but I took a screenshot of a Wall Street Journal headline: exclusive, blank check company strikes cryptocurrency deal. And I said we're at this phase of the cycle. One of the things that's interesting is we're observing waves of dumb money. That's what we call it internally. Like
Yeah,
where are
that's a
we
great way to put it.
where
Yeah.
are we in the dumb money phase, right? And the dumb money phase is Davy day trader, SPACs, crypto booming. Ha ha ha, Grandpa, you missed it out. I bet you Doomberg's mad he didn't buy Bitcoin, like as if I need Bitcoin in my life to create wealth and to preserve it for my next generation. Nothing wrong with any of those assets. Knock yourself out. Some people specialize in that. Some people are really good traders. I'm not a good trader. If you're not good at something and it costs you money when you try to do it, then stop doing it. It's not that complicated, right? I am good at compounding my personal capital in the private markets, and so that's where I focus all of my energy. Um, but we're not quite at the top of dumb money. We're at the early signs of it. Um, when I start to see SPACs making a comeback, I start to a great strategy in the private markets. Let you in on a little secret, just between you and me, uh, is to own businesses you'd be happy to hold because they produce cash, and if somebody wants to overpay for it, sell it.
Hmm.
And we're at the phase of the cycle where it's beginning to get interesting to be a part owner in a bunch of businesses you have no need to sell because they're producing cash, but somebody might walk in and be willing to overpay for it. And if somebody's willing to overpay for it, hit the bid and then do it again. So, our specialty is seeding businesses that produce cash and holding them. And again, we're not going to sell it at fair value because we like owning it. But if
Yeah.
somebody wants to pay an unfair value for it, that's a whole different thing. Well, what we're seeing right now is a lot of unfair values in the stock markets. The vast majority of investors don't participate privately. It's a complex world, as you know. I like to joke that, I teach my children that you haven't learned how to date until you've gone through your first breakup. Well, you haven't learned how to be a private investor until somebody's stolen from you, right? It's
Mm.
sort of a rite of passage. And I can see that you're nodding because you know exactly what I mean, right?
Yeah, yeah.
Um, and like actually private investing is all about the person you're doing business with more than anything else. And so we have, like, if our contract is more than a page, we have the wrong partner because a contract's only as good as you're willing to sue to enforce it, for example. Um, so yeah, I think we're at that, we're ascending back up the dumb money phase. It's not quite 2021 yet, but it has echoes of 2021. But this can go on for a while. We forget how long the SPAC boom hit. But when it crashes, as you know, because greater foolish trades always have a rug pull. It's the nature of the cycle of such transactions. They are becoming a far too common element of the public markets, which is disappointing, I would say. The long ago, the public markets stopped being a place for capital allocation that optimizes gross domestic product. Like
Yeah.
it's now just a giant casino, mostly, where everyone is playing a game of musical chairs and dropping bags. Which again, it's fine. Just you'd have to recognize before it is. Like I see Chamath is all over Fintuit again. Like that's a sign. If Masa-san's writing big checks again, that's a sign, right? I'm seeing, because I'm playing around in the AI startup space, ridiculous companies raising money at stupid valuations. Um, I saw a startup that has no business being, and by the way, just like terribly structured raises too. I saw a startup raise like 3 million and a 90 million valuation. That's a terrible deal for both. Like the investors are getting no ownership, and the company's not getting much money. And when it needs more, because things are turning to the downside, it's going to have to do a down round, and then it'll be in that bucket of undersubscribed deals. Like there's ways to create these businesses and to take smart money from smart people at the right price at the right time when you need it. And we're seeing a lot of lack of discipline, especially in the hot spaces like AI. And we might see that as well in the rare earths, metals, China competition space too.
Yeah. You just laid out an incredible, array of the market environment here, Doomberg. And I've just question in the back of my mind, and we've talked about private equity a number of times with guests on the show, and a lot of people are really kind of concerned about where it's going. It seems like they're running out of ideas. But are you seeing synergies with private equity moves on the back of, this dumb money type of environment that we're seeing? Like I just saw a headline a couple days ago, like private equity considering making moves into youth sports. And as a father of two young children, both involved in youth sports, I see all of the troubles and tribulations and the commoditization of young athletes every day. And it's like the last thing we need is a private equity firm coming in and trying to squeeze the juice out of that. That's scary.
Yeah, private equity as a role model has kind of run its course. And literally, as we're recording this, the main headline on the Financial Times is private equity firms flip assets to themselves in record numbers. It's actually an important headline because what you have right now are literally trillions of dollars of paper wealth, mark to market, absurdly, for which these firms are charging a fee to manage, quote unquote, and they're literally raising new funds to buy out old funds because the LPs of the old funds want some liquidity and need some of their money back. And there's sort of you know a bit of a Ponzi sniff to it, a little bit of whiff of Ponzi, if you know what I'm saying. Like if no new investor is willing to pay at your mark, is it really your mark? And if you take a down round, what happens to all the performance fees that you've been charging over all these years? There's all kinds of shenanigans that go on when you align the monetary incentives of those doing the marking with the freedom and flexibility to do the marking. Um, you know, this is an interesting thing. Now, to your specific question, I mean, there's only so much private equity can do. There's only so many deals. I think that business model has been over allocated to on the behalf or on the part of like large pension funds and so on because they convince themselves that they don't need this money for a long time and so they can go out on the risk curve and you know but we're seeing that they're kind of running out of deals and it's not good for the economy. It hollows out businesses, right? I mean, the classic dividend recap strategy: come in, fire a bunch of people, juice the cash flows in the short term, convince a bank to lend you. The bank takes that loan and sells it. The pensions end up buying it because then they get the stream of payments to match their liabilities. It's very circular if you think about it. Um, and all along the way, this sort of set of vampires are sucking the blood out of the economy. And so, of course, they're now trying to get into youth sports and sports as a service. I'm sure they'll get some subscription model for soccer kids or who knows, right? And the maintenance of the local soccer field will suddenly dip in quality. It's interesting to watch. There's been some really great books written on the subject. It's not really a rabbit hole we've gone down yet for Doomberg, but something we've certainly watched because we're in the private markets. I wouldn't say what like I say we do is private equity necessarily. It's more it's a slightly different model, but yeah. And there's ways to do private equity well. You buy companies, you improve them, they cash flow, you're willing to hold them, and when somebody wants to overpay you for it, say like a bigger private equity firm, you let them have it.
Right, right. Instead of squeezing it for all it's
Right,
worth and putting a multiple valuation on it, that's
Right.
Yeah, that's exactly what's happening. And youth sports is just like one of the ideas that I've seen flaunting around. I mean,
Oh, HVAC roll up, funeral homes roll up. I mean, you name it.
dentistry is one I've
That's,
also
yeah,
seen.
dentistry. Yeah.
Local dentist office. Boy, I tell you what, like my dentist office literally is like a block and a half away from my house. Local community, two ladies run it, great dentists. I've been going there for years. If it ever gets wrapped up into a private equity, I'll be happy to drive 5 miles away to somebody else's community to work
Well, they're
work on
giving
my
these,
teeth.
they're giving what essentially are unsellable businesses exit liquidity. But we think about this all the time. Like Doomberg right now is you couldn't sell it. It's great business. Cash flow is great. We value it conservatively on our own internal balance sheets. Um, we could build it to sell, um, but it wouldn't be run the same way. We've had offers to be bought to collaborate for outside investors. We've turned them all down. The original founders of Doomberg own all of it, and we just pay ourselves with dividends, right? Flows through the company. Um, but we have a model that works. I'm sure they could combine us with five other finance or energy oriented newsletters and create some giant media company, and maybe somebody will come and write us a check that's big enough that make it interesting for us to do that. But we don't have an urgency to do that. It's a great business. We're happy to own it.
Yeah. We're kind of pivoting our way into bigger themes here in the discussion, which is exactly what we wanted to do. And again, kind of back on this general macro type of theme, Doomberg. I do want to ask you about gold. Back in late last month, you did a pro tier. Your Doomberg Pro members had the option to sit in on the presentation, Goldileo, the yellow rock at the center of the financial universe. Here we are again. Gold seems like it wants to challenge those highs once again. It had two incredible days this week. How are you watching the gold market? What is it really represent in your mind? What's it representing here?
Yeah. So in Goldileo, thanks for mentioning that. It was a very well received pro presentation. Just for your listeners' sake, we have our annual subscribers who get the newsletter, and then our pro subscribers get the newsletter and a monthly recorded presentation, typically 45 minutes to an hour long. And the one we're doing this month is on the Arctic Circle. So that'll be a pretty interesting one. But in Galileo, our main point was there is no money today. The three definitions of money are medium of exchange, unit of account, and store of value. No fiat currency satisfies the third criteria. The US dollar is not a store of value. And gold is not widely accepted. Bitcoin is not widely accepted as a medium of exchange, which means there is no money today. We have currencies and we have stores of value. And the ultimate store of value in our mind is gold. And the price of gold is actually the reverse price of the US dollar. That is how we view gold. And it used to be that a US dollar, 33 of them or 35 of them would get you an ounce.
Mhm.
But now it takes 3,400 of them, which means since Nixon, closed the gold window, the US dollar has been debased by 99%. And so gold is not an investment in our portfolio. And it's the one asset in our portfolio that when we see the US dollar price of it move too high too quickly, it concerns us because we have far greater pile of assets denominated in US dollars than we do ounces of gold. It's just because of the nature of our saving strategy. Um, so if you view gold as fixed, as in the center of the universe, then a whole different way to analyze things becomes apparent. So, for example, when you price how many barrels of oil an ounce of gold buys you over the last 40 years, you see that the oil and gas industry is a giant deflationary machine.
Mhm.
And to own the commodities outright is silly because the long term real price of all commodities is always lower. Maybe a few companies can make some money, but if you're just buying commodities for exposure to commodities, just buy gold. Like you can get 50 barrels of oil now with 1 ounce of gold, up from an average of like 10 in the 80s, right? Um, what does that tell you? It tells you that the oil and gas companies are beating back depletion and inflation with their technology. And so the Bloomberg inflation-adjusted price of oil today is $20. Now that's like $1983, I think, is the starting point for that index. Could be wrong, but just take the price of gold and divide it by the price of oil and plot it over 40 years. Just do the same thing with corn. The number of bushels of corn you can buy now with an ounce of gold is insane. Why? Because seeds and chemicals and farming techniques and GPS monitored tractors and perfect watering systems and all of that stuff has made it incredibly cheap in real terms to grow corn and to grow soybeans. And then, of course, layered on top of that, all these markets are becoming more efficient. And so when you look at gold as the unit of account and a store of value, then your analysis of the world changes. And that was what we did for about 45 minutes in that presentation. We defined what money is. Last point I'll make, which I think is probably an important one, and one of the reasons why gold is running or the dollar is debasing, is because U.S. treasuries are no longer neutral reserve assets used for the settlement of imbalances in international trade. Now, let me unpack that a bit. Prior to the last decade, U.S. treasuries were considered money good, and they were neutral. In other words, a neutral reserve asset is an asset that everybody who trades can park their value in, their excess sales in, and don't have to worry about it being confiscated, cheated out of it. And for centuries, gold played that role. Gold was the neutral reserve asset. Gold is nobody's credit, right? Physically owning your gold is physically owning your gold. And so if you have excess sales to one country, you're running a surplus, you need a place to park that value that is trusted and stable. And in the aftermath of the closure of the gold window, credit where credit's due, Luke Gromen coined the phrase, the dollar was managed to be as good as the oil was managed, as the dollar and oil, good as gold, good as gold for oil. The dollar was meant to be as good as gold for oil, and the U.S. wouldn't run crazy deficits, and they would beat back inflation, and U.S. treasuries became the dominant global reserve asset. There's a difference between the reserve asset and the reserve currency. When Biden sanctioned and Europe sanctioned Russia's $300 billion of reserves, that sent a message to the entire world. U.S. treasuries are no longer neutral. They will be weaponized. Whatever your thoughts on the war, or whatever your justifications for that action are, the consequences are undeniable. If you are the leader of a country that has ever been in the crosshairs of the U.S. or might someday be in the crosshairs of the U.S., you can no longer consider U.S. treasuries as reserve assets that are neutral. And China is taking full advantage of this, making it far easier for people to exchange physical gold, the Shanghai gold window. And I think the last 50% run up in the price, or the last doubling of the price of gold, is that shift that we're seeing. Central banks are replacing U.S. treasuries with gold, because, by the way, European debt is no different. The majority of the Russian assets were actually denominated in euros. Putin sold his U.S. treasuries and started buying gold 10 years ago, which is what we think is the beginning of World War III, which is a whole other conversation. But
for next time.
Yeah, but that's what we think is going on. So what we're seeing really is a rotation out of U.S. treasuries by fiscal sovereigns into gold. And once that trend begins in earnest, it's kind of a hard thing to stop.
You did mention when gold starts making big moves higher, you get a little bit concerned. Are you concerned now at $3,400 an ounce, if not higher?
I mean, it's an important input into our global framework for how we create and preserve wealth, for sure. But my real concern is, let's say we wake up tomorrow, and Scott Bessent announces that the U.S. is going to revalue its gold holdings at $7,500 an ounce. There's plenty of reasons why he might want to do that, by the way, because then they will be credited with an enormous amount of money at the Treasury, which he can then use to sterilize a lot of the short-term debt refinancing that's coming that he's been very much worried about. That would be what I would say is a concerning moment, because suddenly, in real terms, if you think the price of gold is real,
Yeah.
um, then that means other US dollar denominated assets that you have buys you a lot less gold,
Right. Right.
right?
I know I want to be mindful of the time here, Doomberg. We got a few minutes left, but in that, what you were saying about earlier about not wanting to hold the physical commodity actually reminded me of a debate I was actually reading about out of Ed Conway's book called Material World, where he kind of breaks down the debate between the Malthusians about disparity would lead to resource scarcity, and then Julian Simon in his book, in the last couple decades called The Ultimate Resource, where he challenged that thesis. And it's an interesting debate. I just thought that kind of like picked up in the back of my head that maybe I thought people might be interested in kind of understanding both sides of that. But it just made me kind of the light bulb went off in my head because I was just recently reading that. And I thought it's a good book for people involved in commodities to read and do that. But anyways, Doom, thanks so much for your time. It's really good to see you. It's really good to talk to you as always. What's next on the old Substack? What's coming down in the newsletter world?
Yeah, great. Trevor, it's always great to talk to you as well. And let's not allow so much time to pass between this and our next
Yeah, I'll do
conversation
my
because,
best. I'll do my best.
yeah, I always enjoy them. Our very next piece, we're publishing an article on, the new statistical review of world energy just dropped, and that's like Christmas for us here. And we're doing a detailed assessment of the European Union's energy situation compared to Russia
Hmm.
and why Russia was always going to win this war. And starting last year, the statistical review started publishing a separate line item for the European Union, which makes analysis very easy in that regard. It's really some stunning numbers. That's probably going to publish on Friday. Then our Doom Zoom is going to publish on the Arctic Circle, the new great game. And then the article after that's a fascinating one. We're going to profile this super dam that China is making that would just blow your mind when you see the numbers. It's literally going to change the rotation of the Earth. But more importantly, it's going to change the entire energy market in ways that few people have realized. And so we were debating whether that might not justify an entire pro-tier presentation. But for now, I think we're going to try to at least fit the openings into an article. One of the things I love about my job, by the way, is I just get to write about whatever I care about, whatever I find interesting, and people seem to enjoy it. What a way to live, right? I mean, so get paid to go down these rabbit holes and to study things and learn things, and then the network effect. People give us great article ideas all the time, and so it's really, really fun. And then I get to come on here and shoot the breeze with smart people as well. So anyway, Doomberg.com for everything. Trevor is great.
All right. Thanks, Doomberg. We'll talk to you again soon. Have a great weekend.